Welcome back, everybody. My name is Tank. This is the IBC Gang YouTube channel. Here we talk about everything that's happening in the traditional markets as well as the crypto markets with a specific interest always on what's happening within the Cosmos ecosystem. For today's video, I want to quickly talk to you guys about my 200 SMA strategy. That same strategy that I've been sharing with you guys during my live streams that help me find flooring positions whenever we see downturns within the markets. Of course, right now we actually are seeing a significant downturn. And so I thought it would be appropriate for me to kind of share with you guys in more detail how I formulate my 200 SMA strategy and how I apply it within my charts. Now, before we jump on in to the strategy, if you guys would do me a huge favor, take a quick second, like this video, subscribe to the channel. Admittingly, it really does help us tremendously to get more exposure. And when you guys do, think of it this way: if you're a cosmonaut, not only are you helping me out, but you're helping yourself out, because the more people that see these videos, the more exposure the Cosmos ecosystem gets. And that means the more exposure your own bags get. So do me a favor, do yourself a favor, do everybody in the space a favor, like the video, subscribe to the channel. Let's go ahead and jump on in to my 200 SMA strategy. I do want to reference to you guys that we are starting off on the daily time frame. I'm using the NASDAQ or the US 100 index for our sample chart during today's video. And with that being said, I do want to also point out to you guys that if you guys are getting a little bit confused on what's going on within the charts, I am using Market Cipher as my primary oscillator and indicator tool of choice. That's why you're seeing a bunch of these blood diamonds and triangles and red X's. It's just a program that I like to use. It has nothing to do with my 200 SMA strategy. But I do want to just point it out there for you guys so you guys don't get confused about what we're looking at while we're looking at my 200 SMA strategy. The more important thing that I want you guys to actually reference, though, is this yellow line right here. This yellow line is the 200 SMA. Now, if you guys don't know what the SMA is, that's simple moving average. So this is just the 200 simple moving average, or the 200-day simple moving average for this chart. Again, just for reference, we're on the daily time frame and we're looking at the US 100 index or the NASDAQ. Now, all I've done for the 200 SMA strategy is gone back and looked at the 200 SMA and price action and measured the moves below the 200 SMA whenever the price action cut below it for a significant amount of time. In this case, I like to use 15 to 20 days of price action below the 200 SMA as a measurement for me to pull from. I didn't like to use little wicks or quick moves below it because it's not really indicative of true price action below the 200 SMA or real movements below the 200 SMA. So I didn't count every little wick or every move real quickly into the 200 SMA and out. I used a time reference of about 15 to 20 days minimum that price action had to stay below the 200 SMA for it to count. Now let me go ahead and show you guys what this looks like. I've manually measured the moves below the 200 SMA once the price action cuts below the 200 SMA for 15 to 20 days minimum, and measured those out in percentages, manually checking it twice, even going back a significant amount of time. I've gone back all the way to about 2000. I think it was actually August 23rd, 2000. This is where I actually stopped going back and pulling measurements, because that's 20 plus years of price action. And what I wanted to do was not go back too far to where the market's relevance isn't comparable now. So again, I just went back 20 years, which in my humble opinion, I think that's a good amount of time to pull price data from. And as you guys can see here, we've pulled measurements of when the 200 SMA does not hold up as support and price action cuts below it for a significant amount of time. Now, these measurements total up to 26.27% total average move down once the 200 SMA is broken over the past 10 breaks or 20 plus years. That is a strong measurement, and that is encountering all kinds of market volatility. Everything and anything was measured here just by price action. So there's no bias, there's no nothing. It was taken into account on many different things. It could have been health scares, it could have been market crashes, like I said, it could have been conflicts. It didn't matter. All we're doing is we're pulling using the 200 SMA as a reference point, and 15 to 20 days being the actual measurement that had to be met underneath the 200 SMA when we're taking our measurements. So we're measuring all of those out. And as you guys can see here, that gives us 26.27 26.27% total average move down once the 200 SMA is broken over the past 10 breaks, or again, 20 years. That is the strategy that I've been using that helps me find flooring positions within the charts. Now, I'm not telling you guys that this is the absolute bottom by any means. Nobody can tell you where the absolute bottoms or tops are. This is just an average that tells us, based on price action in the past, that we should see flooring positions in the charts happen right around 26.27%. That is taking into account all measurements in the past, guys. All measurements in the past. Again, if you guys can see here on our recent pull down in the markets, we actually hit it perfectly. And again, if you guys haven't been following along, we've been preaching this in our live streams ever since we actually saw the top here. We were telling people that the average move down was going to be about 26.27%. Lo and behold, we actually hit it to a T and rallied from that low. Granted, it could necessarily be a bear market bounce, but we rallied to a high of about 22% in the NASDAQ, which is massive. And that happened in a relatively short amount of time. Now, the market is coming back down, so we got to be prepared for that. But again, the measured move down is about 26.27%. Total average move down before we actually start seeing flooring positions happen within the markets. Now, we still have quite a bit more to go from where we are currently. Right now, it's about 13.35%. Again, that could happen relatively quickly. It could happen over a set amount of time, or it cannot happen at all. I'm not saying that I know exactly where the floor is. I'm telling you, on average, this is a good place for us to start seeing flooring action take place on the charts. Now, again, this might be a great place for you to start deploying a DCA strategy. That's up to you. But I'm telling you guys, this has worked for me time and time again in the traditional markets. And I've been deploying this strategy in crypto using the traditional markets index charts and this strategy quite well. So again, I just kind of want to point this out to you guys, show you guys how I use my 200 SMA strategy. Hopefully that makes sense to you guys. You can do this on any one of these charts. As you can see, I've done it on the Dow Jones, and we haven't even got close to the Dow Jones average. The Dow Jones index tells us it should be right around 21%. We came all the way back down to where our previous cycle top was before what happened in March 2022. I think you guys all know what that was, and basically bounced off of it. So again, we were watching that zone, but on average, the market is telling us that we could see the Dow Jones come all the way down 21%. As you guys can see here for the SPX, that's 21.81%. As you can see, we got really close to it, but it didn't touch exactly. Again, nobody knows exactly where the bottom is, but we are coming back down, so it could get back tested. Now, I can tell you guys how I like to DCA, but I think that's for another video, but I'll quickly just hint to it, is since I don't know where the bottoms are, I like to DCA a little bit above, a little bit right before, a little bit below, and a little bit below that, just to ensure that I actually get some of my limit orders filled while I'm using this 200 SMA strategy. But again, that's another video for another time. Be on the lookout for that. Hopefully this makes sense to you guys. Again, it's really, really simple. All I've done is I've used the 200 SMA as a reference point and 15 to 20 days for price action to be below the 200 SMA for it to be counted as a measured move. And I've taken those averages and combined it, and that's giving me over 20 plus years of price data to go by, which tells me 26.27% is the total average move down once the 200 SMA is broken over the past 10 breaks or over the past 20 years of price action. Again, you can see that it hit perfectly before, and we could be coming back down right now and retesting it, giving a double bottom currently. I don't know that for a fact, but again, it's just something that's out there. So I figured I'd let you guys know. We could definitely go down further. And as you guys can see, I do have reference points looking at that further price action below our average. But until that happens, I'm not too worried. I'm just going to stick to my plan, and it is what it is. Again, guys, do me a huge favor. If this was beneficial, if this was at all intriguing, like this video, subscribe to the channel. Admittingly, it helps out quite a bit, and I would wholeheartedly appreciate it. With that being said, guys, I'll see you on the next one. Peace.